Hello and welcome to the Investing Iguana, where we help you make smart property decisions in Singapore. I'm your host, Iggy, and today we're going to talk about how to avoid buying an unprofitable condo. Condos are one of the most popular types of property in Singapore, especially for foreigners who can't buy landed property without government approval. But not all condos are created equal, and some may end up losing you money instead of making you money. So how do you spot the warning signs of a bad condo investment? How do you avoid buying a condo that will depreciate over time, or that will be hard to sell or rent out? Well, that's what we're going to cover in this video. We've compiled a list of 7 tips on how to avoid buying an unprofitable condo in Singapore based on our own research and experience. These tips are not exhaustive or definitive, but they will help you narrow down your short list of potential projects and avoid some common pitfalls. So without further ado, let's get started. Tip number 1, timing of the launch and when you sell. One of the most important factors that can affect the profitability of a condo is the timing of the launch and when you sell. This has nothing to do with the quality or location of the condo itself, but rather with the market conditions and cycles. As you may know, Singapore's property market goes through ups and downs, depending on various factors such as supply and demand, economic growth, government policies, interest rates, etc. Sometimes, the market is hot and prices are rising fast. Other times, the market is cool and prices are falling or stagnant. If you buy a condo at a peak, when prices are high and demand is strong, you may have limited room for further appreciation and a higher risk of losing money if the market turns sour. On the other hand, if you buy a condo at a trough, when prices are low and demand is weak, you may have more potential for capital gains and a lower risk of losing money if the market recovers. For example, let's look at Urban Vista, a condo project that was launched in 2013, right before the last peak of the property market. Shortly after its launch, the government introduced several cooling measures such as higher stamp duties and tighter loan restrictions, which dampened the market sentiment and drove prices down across the board. As a result, many buyers who bought Urban Vista at its launch price ended up selling at a loss later on. As of 2023, there were 76 unprofitable transactions out of 114 resale transactions for Urban Vista. That's more than 2/3 of the buyers who lost money on their investment. So how do you avoid this situation? Well, one way is to have holding power. Make sure you can afford to keep the condo for a longer period than planned, in case the market goes through a downturn. This way, you can wait for a better time to sell or rent out your unit. Another way is to buy early enough with the best possible launch price. Developers usually offer discounts or incentives to early buyers who sign up during VIP previews or on the initial launch weekend. This is because they want to create hype and urgency for their project and show strong sales figures to the media and investors. These early bird discounts can be seen as a form of fast profit. For example, if you buy a unit for $1.8 million during the launch weekend, and the price goes up to $1.9 million by phase 2, you could have made $100,000 just in a matter of weeks or months. Of course, this is not guaranteed that prices will rise in later stages. Sometimes, developers may lower their prices or offer more incentives if sales are slow or if there is more competition in the area. So it's always good to do your homework and compare prices across different projects and locations. This leads us to our next tip, changing launch prices. Tip number 2, changing launch prices. As we mentioned earlier, developers usually offer the best prices to early buyers who sign up during the launch phase. However, this doesn't mean that prices will always go up in later phases. Sometimes, developers may adjust their prices depending on the market situation and the response from buyers. For example, if sales are slow or if there is a lot of competition in the area, developers may lower their prices or offer more incentives to attract more buyers. This can be good news for you if you are looking for a bargain or a better deal. However, this can also be bad news for you if you bought at a higher price earlier on. You may feel cheated or regretful that you didn't wait for a better offer. You may also face difficulties in selling or renting out your unit later on, as there may be newer or cheaper units available in the same project or nearby. So how do you avoid this situation? Well, one way is to monitor the launch prices of different projects and phases and compare them with the resale prices of similar units in the area. This will give you a sense of the price trends and the demand and supply situation. Another way is to look for projects that have a good track record of maintaining or increasing their prices over time. This may indicate that the project has a strong value proposition or a loyal following of buyers who appreciate its quality or uniqueness. For example, let's look at the a condo project that was launched in 2020 and sold out within a week. The had a very attractive launch price of around $2,400 PSF on average, which was lower than some of the older resale condos in the area. The also had a very appealing concept of being a mixed-use development with retail and office spaces, as well as smart home features and flexible layouts. As a result, the attracted a lot of buyers who snapped up the units quickly. Even after its launch, the continued to maintain or increase its prices over time. As of 2023, the had an average resale price of around $2,800 PSF, which was about 17% higher than its launch price. That's a pretty impressive return for those who bought early. So if you can find projects like the that have a strong value proposition and a consistent price performance, you may be able to avoid buying an unprofitable condo. This leads us to our next tip: newer, better-priced neighbors. One of the factors that can affect the profitability of a condo is the competition from other projects in the area. Sometimes, there may be newer or better-priced neighbors that can steal the limelight or the demand from your condo. For example, let's look at the sale at Marina Bay, a condo project that was launched in 2004 and completed in 2008. The sale was one of the first luxury condos in the Marina Bay area, and it had a very premium price of around $1,800 PSF on average at its launch. However, after the sale was completed, there were several newer projects that came up in the same area, such as Marina Bay Residences, Marina Bay Suites, and Marina One Residences. These projects offered similar or better views, facilities, and amenities as the sale, but at lower or comparable prices. As a result, the sale faced a lot of competition from these newer neighbors, and its prices started to decline over time. As of 2023, the sale had an average resale price of around $1,600 PSF, which was about 11% lower than its launch price. That's a pretty disappointing return for those who bought early. So how do you avoid this situation? Well, one way is to look for projects that have a unique selling point or a competitive edge over their neighbors. This could be something like a rare location, a distinctive design, a prestigious brand name, or a niche market appeal. For example, let's look at Wallach Residence, a condo project that was launched in 2016 and completed in 2018. Wallach Residence is part of Tanjong Pagar Center, which is the tallest building in Singapore at 290 meters. Wallach Residence occupies the top 39 floors of the building, and it offers unparalleled views of the city and the sea. Wallach Residence also has a very exclusive and luxurious concept, with only 181 units ranging from one-bedroom to penthouse types. Wallach Residence also has a very high-end price tag of around $3,500 PSF on average at its launch. However, despite its high price and its competition from other projects in the area, Wallach Residence managed to maintain or increase its prices over time. As of 2023, Wallach Residence had an average resale price of around $3,800 PSF, which was about 9% higher than its launch price. That's a pretty impressive return for those who bought early. So if you can find projects like Wallach Residence that have a unique selling point or a competitive edge over their neighbors, you may be able to avoid buying an unprofitable condo. This leads us to our next tip: niche unit mixes. One of the factors that can affect the profitability of a condo is the type and size of the units available in the project. Sometimes, there may be niche unit mixes that cater to a specific segment of buyers or tenants, but may not appeal to the mass market. For example, let's look at the Interlace, a condo project that was launched in 2009 and completed in 2013. The Interlace has a very distinctive and award-winning design, with 31 blocks of 6-story apartments stacked in a hexagonal arrangement. The interlace also has a very large land area of 8 hectares and a very generous range of facilities and amenities. However, the interlace also has a very niche unit mix, with mostly large units of 3-bedroom or bigger types. The smallest unit type is a 2-bedroom unit of 807 SQ Fort, which is quite spacious by today's standards. The largest unit type is a penthouse of 6,308 square feet, which is almost like a bungalow in the sky. As a result, the interlace attracted a lot of buyers who were looking for spacious and family-friendly living spaces, but it also alienated a lot of buyers who were looking for smaller and more affordable units. The interlace also faced difficulties in selling or renting out its units later on, as there was a limited pool of buyers or tenants who could afford or appreciate its large units. As of 2023, the interlace had an average resale price of around $1,100 PSF, which was about 18% lower than its launch price of around $1,350 pounds per square foot. That's a pretty disappointing return for those who bought early. So how do you avoid this situation? Well, one way is to look for projects that have a balanced and diverse unit mix that can cater to different segments of buyers or tenants. This could be something like a mix of studio, 1-bedroom, 2-bedroom, 3-bedroom, and 4-bedroom types, with different sizes and layouts. For example, let's look at Sky Habitat, a condo project that was launched in 2012 and completed in 2015. Sky Habitat has a very striking and innovative design, with two 38-story towers connected by 3 sky bridges. Sky Habitat also has a very convenient location in Bishan Central, near the MRT station and the Junction 8 Mall. Sky Habitat also has a very balanced and diverse unit mix, with 509 units ranging from 1-bedroom to 4-bedroom types. The smallest unit type is a 1-bedroom unit of 484 SQ Fort, which is quite compact and affordable. The largest unit type is a 4-bedroom penthouse of 3,638 square feet, which is quite luxurious and spacious. As a result, Sky Habitat attracted a lot of buyers who were looking for different types and sizes of units, depending on their budget and lifestyle preferences. Sky Habitat also had an easier time selling or renting out its units later on, as there was a larger pool of buyers or tenants who could find something suitable for them. As of 2023, Sky Habitat had an average resale price of around 1,600 Singapore dollar PSF, which was about 14% higher than its launch price of around 1,400 Singapore dollar pounds per square foot. That's a pretty impressive return for those who bought early. So if you can find projects like Sky Habitat that have a balanced and diverse unit mix that can cater to different segments of buyers or tenants, you may be able to avoid buying an unprofitable condo. This leads us to our next tip: difficult layouts. One of the factors that can affect the profitability of a condo is the layout and design of the units. Sometimes, there may be difficult layouts that are inefficient or impractical and may not appeal to most buyers or tenants. For example, let's look at the Scotts Tower, a condo project that was launched in 2011 and completed in 2016. The Scotts Tower has a very sleek and modern design, with 4 31-story towers rising above a landscaped podium. The Scotts Tower also has a very prime location in Orchard Road, near the MRT station and the shopping malls. However, the Scotts Tower also has some difficult layouts, especially for its 1-bedroom and 2-bedroom units. Some of these units have odd shapes, such as triangular or trapezoidal forms. Some of these units also have awkward features, such as sunken living rooms, curved walls, or bay windows. As a result, the Scotts Tower faced some challenges in selling or renting out its units later on, as some buyers or tenants found its layouts to be wasteful or inconvenient. Some buyers or tenants also complained about the lack of privacy or natural light in some of the units. As of 2023, the Scotts Tower had an average resale price of around $2,700 PSF, which was about 10% lower than its launch price of around $3,000 pounds per square foot. That's a pretty disappointing return for those who bought early. So how do you avoid this situation? Well, one way is to look for projects that have simple and efficient layouts that make good use of space and light. This could be something like a rectangular or square shape, with minimal columns or beams, and with large windows or balconies. For example, let's look at Duo Residences, a condo project that was launched in 2013 and completed in 2017. Duo Residences is part of a mixed-use development that comprises residential, commercial, retail, and hotel components. Duo Residences also has a very iconic and elegant design, with two 49-story towers clad in a honeycomb pattern. Duo Residences also has simple and efficient layouts for most of its units. Most of its units have rectangular or square shapes, with minimal structural elements. Most of its units also have large windows or balconies that allow natural light and ventilation. As a result, Duo Residences attracted a lot of buyers who were looking for functional and comfortable living spaces. Duo Residences also had an easier time selling or renting out its units later on, as most buyers or tenants found its layouts to be spacious and practical. As of 2023, Duo Residences had an average resale price of around $2,300 PSF, which was about 15% higher than its launch price of around $2,000 pounds per square foot. That's a pretty impressive return for those who bought early. So if you can find projects like Duo Residences that have simple and efficient layouts that make good use of space and light, you may be able to avoid buying an unprofitable condo. This leads us to our next tip: location factors. One of the most common and important factors that can affect the profitability of a condo is the location. Location is often said to be the key to property investment, as it can determine the demand and supply, the price and rental potential, and the future growth and development of a project. However, location is not just about the district or the address of a project. It is also about the specific factors that can affect the livability and desirability of a project within its location. These factors can include things like accessibility, amenities, views, noise, pollution, etc. For example, let's look at the Crest, a condo project that was launched in 2014 and completed in 2018. The Crest has a very prestigious location in District 10, near the Tanglin and Jervois areas. The Crest also has a very beautiful and serene design, with 3 23-story towers and 4 5-story villas. However, the Crest also has some location factors that may affect its profitability. One of these factors is its distance from the nearest MRT station, which is Red Hill MRT station. The Crest is about 900 meters or a 12-minute walk from the station, which may not be very convenient for some buyers or tenants who prefer to use public transport. As a result, the Crest faced some challenges in selling or renting out its units later on, as some buyers or tenants found its location to be less than ideal. Some buyers or tenants also found its price to be too high for its location, compared to other projects in the area. As of 2023, the Crest had an average resale price of around $1,700 PSF, which was about 25% lower than its launch price of around $2,300 pounds per square foot. That's a pretty disappointing return for those who bought early. So how do you avoid this situation? Well, one way is to look for projects that have favorable location factors that can enhance their livability and desirability. These factors can include things like proximity to MRT stations or bus stops, availability of amenities such as malls or schools, views of greenery or water bodies, etc. For example, let's look at Park Place Residences, a condo project that was launched in 2017 and completed in 2020. Park Place Residences is part of a mixed-use development that comprises residential, commercial, retail, and office components. Park Place Residences also has a very convenient location in Paya Lebar Central, near the Paya Lebar MRT interchange station. Park Place Residences also has favorable location factors that can enhance its profitability. One of these factors is its direct connection to the Paya Lebar MRT station, which provides access to 2 MRT lines, the East-West Line and the Circle Line. This makes it very easy for residents to commute to various parts of Singapore. Another factor is its integration with Paya Lebar Quarter, PLQ, which is a mega development that offers a wide range of amenities such as shopping malls, cinemas, restaurants, supermarkets, banks, clinics, etc. This makes it very convenient for residents to access their daily needs and entertainment options. As a result, Park Place residences attracted a lot of buyers who were looking for convenience and lifestyle choices. Park Place residences also had an easier time selling or renting out its units later on, as most buyers or tenants found its location to be very ideal. As of 2023, Park Place residences had an average resale price of around $2,000 PSF, which was about 11% higher than its launch price of around $1,800 per square foot. That's a pretty impressive return for those who bought early. So if you can find projects like Park Place residences that have favorable location factors that can enhance their livability and desirability, you may be able to avoid buying an unprofitable condo. This leads us to our final tip, future plans. One of the factors that can affect the profitability of a condo is the future plans for the area or the project. Sometimes, there may be future plans that can boost the value or demand of a project, such as new developments, infrastructure, or amenities. Other times, there may be future plans that can lower the value or demand of a project, such as en-bloc sales, redevelopment, or rezoning. So how do you avoid this situation? Well, one way is to look for projects that have positive future plans that can enhance their value or demand. These plans can include things like new developments, infrastructure, or amenities that can improve the livability and desirability of the area or the project. For example, let's look at One Pearl Bank, a condo project that was launched in 2019 and completed in 2023. One Pearl Bank has a very prime location in Outram Park, near the Outram Park MRT interchange station. One Pearl Bank also has a very stunning and iconic design, with two 39-story towers linked by sky bridges. One Pearl Bank also has positive future plans that can enhance its profitability. One of these plans is the Greater Southern Waterfront, GSW, which is a mega development that will transform the southern coastline of Singapore into a new waterfront city. The GSW will have new attractions, amenities, and residential and commercial spaces that will boost the vibrancy and value of the area. Another plan is the conservation and rejuvenation of Pearls Hill City Park, which is a green oasis next to One Pearl Bank. The park will be enhanced with new features and facilities that will improve its accessibility and attractiveness for residents and visitors. The park will also be connected to Fort Canning Park via a new green corridor that will create a seamless green network. These sound like good news for One Pearl Bank, as they will improve its views and surroundings and increase its appeal and demand. They will also create more opportunities and activities for residents and visitors to enjoy. As a result, One Pearl Bank attracted a lot of buyers who were looking for a prime location and a stunning design with positive future plans. One Pearl Bank also had an easier time selling or renting out its units later on, as most buyers or tenants found its future plans to be very favorable. As of 2023, One Pearl Bank had an average resale price of around 2,500 Singapore dollar PSF, which was about 25% higher than its launch price of around 2,000 Singapore dollar pounds per square foot. That's a pretty impressive return for those who bought early. So if you can find projects like One Pearl Bank that have positive future plans that can enhance their value or demand, you may be able to avoid buying an unprofitable condo. And that's it for our 7 tips on how to avoid buying an unprofitable condo in Singapore. We hope you found this video helpful and informative. If you did, please give us a thumbs up and subscribe to our channel for more property insights and tips. If you have any questions or comments, please leave them below and we'll try to answer them as soon as possible. Thank you for watching and see you in the next video. This is Iggy from the Investing Iguana, signing off. Stay smart and stay safe.